With your existing record keeping, do you think that it's going to have a big impact on that? I mean, brokers have always done the 100-point ID check for the institution they're lending to. It's sort of, there's no, once this comes in, there's no 100-point check, but there's the KYC parameters and so on. A lot of it probably mirrors what you're doing. Do you think, though, it's going to create a lot of extra paperwork as such, or may just fine-tune and focus the thoughts to look for more so the suspicious or potential suspicious activity with more riskier products that this could be impacted on? But, really the records that you keep may be fairly similar, or how do you think that'll impact?
I think from the 100-point ID it will be quite similar in what we're talking about here. I suppose my main concern, from my understanding, is more in regards to transactions where you've got a high net worth individual that's looking to say, get $1 million line of credit against their property for future investment or share purposes, and just how much more we have to go further investigation in regards to that transaction now. My understanding is we're probably going to have to ask a lot more questions in relation to that. And I suppose from my perspective, I would like to see a little bit of common sense in regards to it as well, in that sometimes in those sort of transactions you can't get, because the transaction hasn't happened yet, you can't get that extra paperwork. So they're the sort of, I suppose, practicalities of the legislation that I myself would really like to understand, and I'm sure there's a lot of brokers out there who don't understand those practicalities as well.
I know with your business you get a lot of clients coming direct to you, but you also have some other brokers who refer business to you as well. Have you thought through how you're going to manage possibly having to do some sort of compliance checking under the anti-money laundering laws of your staff, and also potentially of brokers who refer business to you? You got any thoughts how you're going to manage that? Because that could take up a bit of time too.
That's probably, to be honest, Peter, we're probably concentrated on our own individual staff at the moment as to how we're going to train them up. But you're exactly right. We've got brokers or accountants and solicitors that refer business to us as well. So it just does add another level of training to all those people, all those referrers that we've got out there as well. So and it's hard because you're the third person removed in those transactions. So if anything, you probably want to train them up a bit more, because with your own staff you've got a bit more control. So it definitely is an issue, I think.
I think you've also got to consider too that brokers who have other broker networks have to be conscious of those people actually not being in breach of the Act themselves, or potentially giving you loans that are being used for laundering purposes or financing terrorism. So they could be the one introducing the bad deal to you. So I guess there's a thing there we all as brokers have to watch as we go forward.
No, exactly.
Tim, practically speaking, how do you see how our organisation is going to be addressing this?
Well, I think the first thing to remember is doing nothing is not an option. That's the reality of this situation. Every point in the financial services chain has some level of contribution to make to try and prevent the system from being used for money laundering purposes. And that's the way the legislation is structured. It's trying to create a cascading obligation on a whole variety of different people in that cycle. So the first things you really have to focus on is actually having a program. You have to sit back, look at your business, look at who your customers are, look at what you're doing in terms of your relationship with your product distributor, with any of the brokers or lawyers or accountants who might be referring work through to you, and make a decision on a risk basis about where the risks might lie. And there are some parameters that you can put in place to do that. There are some tools, some risk analysis tools you can use to help you do that. But in the end, it's up to you to make a decision about where you think the risk of money laundering might lie in all of those elements of the chain. Now, you might be sitting there saying, well, how does that benefit me? Well, I think the reality is that there's probably some level of competitive advantage if you're able to demonstrate you have robust process, that you're dealing with this in a simple, cost-effective, efficient sort of way. I think there are some of the big lenders who might look towards your businesses and say, if I can rely on that broker to a greater degree than any other broker, because they've got robust process, then I think there may be some advantage in that. Eventually everyone will catch up to that process. But nevertheless, you still do have to make sure that you are assessing your risk and that you've got a program educating your people, and doing your bit in avoiding money laundering or laundered funds from getting into the financial system.